we've not had one of these for a while because of a Symbio beta. So we've had quite a lot of in-person events, which has been really exciting, and hopefully do a few more in the rest of the year. So in this webinar, we are really delighted that we have Dr. Diana Röttger, who's a principal at Apex Ventures. Diana is a medical computer scientist by background and looks out for TechBio and deeptech healthcare investments for the VC company that she works for. She's also a board member at several TechBio and medtech startups. And she's going to, well, tell us a little bit more about what venture capital is, why it matters, and when is it a good time to go and look for VC, go and speak to somebody like Diana. So I will pass you over. Welcome, Diana.
Thank you. Thank you so much. I hope everybody can hear me. It was great, and you can see the slides perfectly. Perfect. Yeah. Thanks so much for having me. It's a great pleasure. I saw that you can raise hands and you can also speak, all your participants. I unfortunately can't see you, but if you have any questions, please interrupt by raising your hands and then you can speak, and I would love to hear who you are as well. So please introduce yourself as well. If you are not comfortable with speaking up, you can also pose any questions in the, as we now know, chat or question and answer boxes, and we can put them out later or during the presentation. So yeah, thank you. I had several topics that I wanted to discuss with you and give you a bit more color on today. I thought it's good to see for you what my role is in VC, as like I'm the principal, so basically in the middle between all the roles in a VC. And then also what we see is why it matters, when it's a good fit for a startup, and how we assess companies, and then also out of that, how you best deliver the pitch. And at the end, I would also like to introduce briefly Apex Ventures, the firm I work for, because I think it's a great example of how venture capital can help you. So just thank you so much for the introduction. I didn't know that you introduced me. So my name is Diana. I'm principal, as I said. I have a PhD in medical computer science. It's a mixture of traditional computer science, but then infused with computer vision and computer graphics, and then everything applied to medical, so medical data. I'm German, as you can tell. I live in London already for 10 years, have lived in Boston. I was at Harvard Medical School and lived in Paris and in Finland, but haven't lost my accent, as I hear all the time. I think also important, I have two very little girls. I have one that just turned 2 and one is 7 months. So anyone has questions on motherhood and working, I'm always happy to give more color on that as well. Then briefly about my role. So as I said, I'm in the middle in a venture capital fund. So I'm a principal. So it's good to understand the roles, because you have, at the one side, you have the general partners. These are the partners, the most senior people in the fund. Then you have the principal, which are below, and then you have the associates that are below that. And so it's really like different roles, but in some funds, when they're bigger or smaller, it also varies. But my role, principal, is what my job is. I scout for new investments. I look out for trends. I look out for the market. I'm very close with the startups, with founders. But I also help with evaluating the company. So that's what's called due diligence. So as my role is, my background is in science, computer science. That's obviously where I have an interest and experience. But then we also have people who help us on technical due diligence. Like we have several people that we engage, but we also talk to like experts that we engage on a deal by deal basis. I also help with deciding on investments, so that's obviously also in every fund different, but we have a team where we make the decisions for if we go for a investment or not. And I will talk more about how that is done later on. Then a big part of actually why I went into venture capital is that I really love supporting great technology companies and great scientists, great people, and them to become commercial. I didn't say that. So after my PhD and after I was in Boston, I realized that I didn't want to stay in academia, and I really wanted to work in a company because I was in a computer lab and programming, and I didn't have the feeling that I was bringing something to the patient. So that's why I joined a startup, and I was 8 years. I was the third employee, and I was 8 years in that startup until it became a scale up and became bigger. There was no exit, but I was able to build my own unit, and I did everything in the startup from coding, algorithm development, up into working with the users, designing new software, up until actually business development and sales. So I bring a lot of this expertise to the portfolio companies, so the companies that we have invested in, and that's really what I really love to do, and what kind of help and support we as VCs offer. I will also go in more detail later. Then something that's also important is raising new funds, and I will explain how venture capital is structured and how the funds are generated. But the raising new funds is normally something that principal and partners, so the more senior people in a fund, do. So what is venture capital really? I wanted to give some basics here as well. So venture capital provides finance as well as operational expertise to startups. That's what I already said. So startups get money in exchange for shares in the company, but also the VCs help from operational and question and network. And then it's important that you know that startups don't necessarily make money at that point. Actually, in deep tech, so the areas where we are in, and life science, they for sure don't make any money and at that moment when they start engaging with the VC. But very important is that the idea, the USP that the startup has, that they have a great potential for growth. So venture capital is investing money with expectance that there is a massive term exit which returns capital to the VC. So yeah, the VC gets money to invest in companies by raising funds. So that's what I said, like the VC, the partners, they need to get out and find money. And then that's called a fund. And the VC has multiple funds, sometimes in parallel, sometimes one after the other. And each fund has a certain bucket of money that comes from wealthy individuals, from financial institutions, endowments, pension funds, investment banks, funds of funds, family offices. It can be theoretically anyway. And they are all known as limited partners. So the limited partner give the money to the VC. Then the size of the funds can range anywhere from a few million to a few billion. So it really depends on the stage where the VC invests. So seed stage is the earliest, then it goes into, so sometimes you start with pre-seed, seed, Series A, Series B, and so on. And the focus of the fund is then also deciding on how big the actual funds are. Then what's important, what I said, the VCs, what's interesting to the VCs is that the companies create a big exit so that the VCs get a return of their investment, which is a multiple from their initial investments. And It's the main goal for the VC really to get a good return, because they will then the job of the VC is really to make a multiple of the initial investment or the money that they got from the LP to return it also to the LP. So I have some advantages and disadvantages of working with this VC, so that if you understand if it's a good fit and if you are at the right stage. So advantages are, of course, that VCs can deploy much more capital than individual investors. So if you start with your company and you have some money from your own savings or from angel or friends and family, a VC can give you much more money. So usually in science and deep tech is that the companies start with grants, so they get a bit of money to explore their idea, to start with a product, but then the VC is like, so it's always sometimes people use the analogy that a rocket is the grant money, and so gets the rocket on the I don't know how this is called, where the rocket on the place where the rocket starts, and the VC money is then the fire that gets the rocket into space. So VC money is much more capital itself. Disadvantage is that working with VC, there's sometimes very extensive and thorough due diligence involved. So they, of course, want to know you, they want to know the idea, they want to make sure that they de-risk their investment. So, of course, there is a lot of risk, especially I'm investing in early stage, so seed, pre-seed. So there is no revenue there, no numbers that you can analyze. So it's generally risky, and that's also why there is a technical due diligence, financial due diligence on IP, where we have some experts here, and yeah, this is sometimes takes a bit long, especially when you raise a round and you speak to many VCs and they all want to have information. This can be time consuming. Advantages of, but also that VCs provide industry and operational experience, so and expertise. So like me, for example, I have worked 8 years in drug development. I have lots of connections with pharma, biotech industry. I have worked with CROs. I know how a startup is built, a company building expertise. So that's what we also bring to the table. Then a negative thing is that, not necessarily negative, but it's time consuming again, is that a VC expects a formal reporting structure. So that means you need to, mostly on a quarterly basis, you need to report like on hiring, so headcount, scientific, R&D, milestones met, how much money you have left, what you're spending your money, and so on. Then another advantage is that VCs, as I already mentioned, bring a great network. They can introduce you to other investors when you raise new rounds, when you need cash, but they are also very often previous entrepreneurs. They have had their own businesses, they had exits. They can help you to get introductions as well to industry leaders. They are also sometimes, like, I work very closely with my company, they are like another employee or someone that helps you. Then a disadvantage is that an VC has an expectation of rapid growth and they can push you quite hard. So they can push you towards commercialization. They say, okay, you need to get ready, you need to get this product on the market now, and it needs to be quick. And that's their focus. It's important, especially for scientists, because it took me quite some time to change from being a scientist into being an operator into being a VC. So that's important to keep in mind. So then what a VC can also do is increase your visibility, and perceived reputation. So for example, I don't know if you have, you saw, like I post a lot on LinkedIn about my companies, and we have marketing experts who help us with the announcing. We spread messages for our portfolio companies, so they can help you in that channel as well. Then what sometimes is a negative, depending on how a VC is engaged, is that they require a say and how the company they will help to shape the company. In some cases, VCs can and will also replace people, even the CEO. So that they will be part of the decision makers in the company. Then they have raising the next funding round. So they have usually a great network of other VCs. We know each other. I have, for example, with many funds, I have quarterly or monthly calls where we exchange. We are on a global level exchange about trends, about other investment opportunities. So, for example, funds who are raising after a seed, so funds who are investing in Series A, I have regular catch-ups and tell them about my portfolio companies, how amazing they are, what they are doing, and so that's easier than for the companies to raise another round. They also, VCs, it's important to know they expect an exit between 3 to 7 years after investment, because usually a fund cycle is 10 years. So after the VC raises a fund, it's 10 years that they have to invest and then cash out. And that's when they need to return to the LPs. So it's important to have that in mind as well. So why do people raise VC money and when? So especially in life sciences, it's often to grow manufacturing. So sometimes you have a prototype or you have it in a small scale, and then you raise a VC round to go big scale and manufacture on a big scale. If you're thinking about regulatory approval, it's also sometimes when FDA clearances or CE marks are sought, then it's a good time to raise VC money, or after that. So then also to go to another country. So if you're, for example, working well in the UK, but now you want to explore Europe, then you need more people on the ground. You need a different contract research organization engagement. So then you need more money and to scale. And also expand your business, hire new people, create sales forces in different countries or in different units. That's also, so you can see you always have sort of a minimal viable product in place, and then you want to go big. So that's when we see money is needed. Enhanced product development. So when you want to include AI, for example, or want to include some sort of machine learning, or enhance the product that you have, or as I said, hire new employees. Example of VC money, of course, is Google, Facebook, Skype. So all the big Silicon Valley kids, they that's where it basically came from. Other ways of financing is always important to know, of course. Grants is very good. So most of the companies actually who I work with, because I only focus on TechBio space, they have always grants that come along. So some of them, they have exhausted all the grants and then they went into VC, or some of them are still able to apply next to a VC. Some of the grants also are tied to investment. So some of the grants are only materializing if there is matching from an investor. So that's also worth to check. So how it works. So very important to keep in mind is that each VC has specific guidelines for the types of company they invest in. For example, life science, AI, SaaS, consumer, and that's really important to, it might sound a bit general, but I get a lot of emails from fintech or companies where I think, okay, I don't know really where you get my email address from, but check my LinkedIn. I write exactly what I'm interested in. You are wasting your time. And also, I really like, and we speak about outreach in another slide, but really be specific on, find out who the person is. So each person, mostly like a fund itself has a thesis. Like with Apex, I will show you our thesis, but we're interested in deep tech, groundbreaking, IP worth technologies, and in specific sectors. And so really understand if a VC firm is the right fit for you, because you're going to work with them for 10 years. Imagine, it's like some people say a VC relationship is worse than a marriage because you're much closer tied together with money, and for at least 10 years when you think about how long marriages last on average. So it's important that you also do your due diligence of the people and investigating them when you speak to them. Then how do you get to VC? So introductions is really the best thing. I get, as I said, I get loads of emails, loads of LinkedIn messages, and it's really hard for me to take sometimes this seriously. As I said, like some of the people, most of them, they didn't do their research and it doesn't fit. Introductions are really great. So if you can get introductions from maybe your tech transfer office or from people that you've met, like most of the people are really also nice to speak to in the VC world. That's how I got into VC, through introductions. Then accelerators, we look at accelerators, incubators, Europe-wide, pitching events. I like to go to the virtual ones, or haven't been that much to personal pitching events, but that's also good. Cold outreach, as I said, try to be specific, try to really understand what do the people want to invest in. And then events and communities like this one is really good. Then startup presents their pitch deck. I actually had today a lady who said, I don't want to show you my pitch deck, I will tell you the story, which I really liked because I had the pitch deck already. She sent it ahead. It's also good if you send it ahead of the call, because we do look at it. We try to prepare for the call as well, that we can make it useful. And then she explained to me where this all came together and why she founded the company, and it was great. I think it's always good. It shows that the founders are really strong and really believe in what they have, and they have a story. And then you can always follow up with sharing the slides, or when you have specific illustration or want to show the machine or something, then it's of course useful to pull out a slide. And she did that as well when I had a specific question. But it's really having a conversation and also be able to share what you're doing. Then the due diligence, so that includes the technology. So I most of the time go personally to the labs, to meet the people, but we sometimes also include experts. And we look at the team, and I will talk about that more in detail. Financial predictions. So what do you think? What's your go-to-market strategy? What do you think when you can generate revenue? At what costs? What are regulatory costs, and so on? And yeah, and then we speak also to experts, as I said. And then the VC team is, it really depends. Some funds only have partners, some have principals, associates, and then it depends. There is always an investment committee that makes decisions, so it's composed out of different people, and then they decide if the startup is worth to invest in. And then when the VC says yes, then and the startup says yes as well, then there is generally it's a minority stake in form of shares that the VC has in the startup. and they invest along other investors. So how it is that in the round is like several investors normally come together and fill the round up, and then they invest all together. And then there's the negotiation about the terms and conditions. So that's where we also engage lawyers as a VC fund, and we decide together with all the people involved, so the company, all the shareholders, existing shareholders, and the people who are participating in the round, how much money at what valuation. So how much does everybody believe the company is worth today? And that is a math equation that then the output is how many shares each one get. And that is then that's called the cap table. So where you have all the individual shareholders and how much the money they put and how much percentage of the company they have. And then it's also important to decide on board seats. So is the VC, as I mentioned previously, I'm on the board of several companies that we have invested in. And it's who is on the board, what voting rights does everybody have, and important what happens at an exit. So you can Google term sheets, example term sheets, and Y Combinator has a very good explanation of term sheets and different financial instruments to understand how the legal part is done. And then VCs get a multiple of their investment back. So that's usually about 5 to 7 years. And then there is an expected exit. So exit means that there is either an IPO, so the company goes public, or an acquisition from any other company. And that's where the VC can cash out. Yeah. Then I hope that was clear. And then what a VC looks for in a company. So I said already, all the companies we are investing in, most of them are pre-money, pre-revenue. So there is a prototype. People came just straight out of university or finished a PhD, or there's an idea, but we are early investors, so we get really excited about the technology. We believe that the team can build it, and then the decision is made on that. So to summarize, the most important thing that we look at in early stage is the team. So the market is as well. It needs to be a big enough market that can be disrupted and is ready. But the team needs to be able to transform that market. The team needs to be able to bring the product out, and that is a very personal thing. That's why I also always like to meet the people, and it can take several meetings and calls until we get to know each other. And yeah, of course, the product and technology, we need to be convinced that that's in good shape and that's useful, and the USP is better than other competitors, because of course there are other people trying to do similar things or the same things, because if it wouldn't be like that, it would be strange. Like it's very rare that one idea only originates in one place. So then what is important, as I said, yeah, the USP. So really make it clear that you showcase the USP. Like why are you ready? Why is the market ready? Why is that important that you deliver? Is there a change in regulation? Is there new findings in science? Like is there a need for new manufacturing? So why is that at the moment the right time, and why do you have the product? Then I've already mentioned regulatory pathway. For me, it's very important that, especially in life science, when it's, for example, drug therapy, or so that you have a good regulatory pathway. So you've understood you need to do this study for getting FDA approval, and then you do this, and so regulatory support is very important. And then IP. So we really invest in technology that has IP where you own the IP. So it's good to get clarity on who owns the IP. Then one thing I also wanted to mention is product market fit. So it's important, of course, that you develop a product that the market needs, and sometimes the market doesn't even know about it, and that's one thing. But what I find also very important is the founder market fit. So why are you the one who is the right person at that moment for that problem? Like, do you have, for example, deep expertise because you have done your PhD in this field, or you're one of your close relatives has experienced it, or a problem, or why? What's the story? Why is it you, and why do you have the ability to make this very big? Then yeah, I wanted to last thing I wanted to explain a bit Apex Ventures so that you can see how all of this really translates into an actual fund. So as I said, I joined Apex last year in February as a principal, and we are really looking in deep tech, and deep tech is can be anything in AI, machine learning. Here we say medical technology. We have invested in diagnostics and AI drug discovery, and I'm on the board of a company where we develop a micro robot that goes into the brain to deliver drugs, or other things measuring. It's smaller than a grain of rice. So we also have hardware, but we also have AI and machine learning for radiology. Computer vision algorithms where we look at MRI scans and calculate quantitative information from MRI scans to support, for example, drug development. Then we have people who are really excited about mobility and space. We have several investments in space companies. We have quantum tech and photonic, where we're interested in lasers. We also do, as I said, robotics, autonomous systems. So we have different people who are excited about different things. We generally focus in Europe, and the fund is based in Vienna. So we invest in the DACH region, so Germany, Austria, and Switzerland, but generally everywhere in Europe. We also have some US investments. Then we have companies with first product iterations, so minimal viable product. So that's what I said, there has to be a product in place already. Yeah, then transformative technologies that have an impact and can be scaled. So that's what I said, it needs to be at a point already where the next step is really how to get it out to masses, or to get FDA or regulatory approval. Then what we provide. So we have several people who are experienced in several things. So we have, for example, one partner who is a radiologist. He has amazing clinical experience. I'm more on the scientific drug development side, but we also help with hiring talents. We have good connections, for example, with headhunters and firms, and we have a great network. So I have a massive network of people who are interested to work in this space. Then we help with business development. So I have also worked closely with companies to introduce new customers, to do sales trainings, business development, partner clinical research organizations, Then we, as I said, we sit on the board. So we're helping to find the commercial roadmap. We help not so much with the R&D, because of course the technical part is really with the founders and with the founding team. But to basically form a company around this, and how you can work with advisors who are potential advisors, yeah, and how to run the company. And then also, of course, with the exit in mind, we help with fundraising. We help with we're really, after investment, a big supporter of the company. And yeah, so as I said, that's my favorite thing to do, honestly. It's such a great thing, and I'm so blessed to be in this position that I can be part of so great companies and so cutting edge science that I can help to bring forward to save lives and to help with drug and therapy development. So it's a great place to be in. And thank you so much for your time. I've now spoken for such a long time. I hope you found it useful, and I'm very happy to answer any questions, or if you have any companies that I should look at, I'm very happy to do that. And if you want me to look at your pitch deck, for example, and give you some thoughts, please feel free. It's a total safe place to share. I'm very happy. I'm in several female incubators, accelerators, where I help women and we look at the deck together, or how they can deliver their message, or I put them in touch. So if you think anything of the things I just said and my experience is useful, please don't hesitate and write. And yeah, I would love to hear from you what you're working on. And yeah, sorry, I have to now stop sharing my screen, because otherwise I can't see any questions or any one of you. I hope that's okay.
Yeah, that's fine, Diana. Thank you very much. That's really fantastic, really detailed presentation. Thank you very much. Questions and answers, if you can either use chat or Q&A, guys, if you've got any questions for Diana. I just have one, and then I'm afraid I have to leave. But I was what is your very top tip for somebody looking for out of all the different factors, and obviously there's a lot of things that you consider. What do you think is the one thing that really stands out for you when you're looking at an investment that kind of gives you that gut feel that it's a right thing to invest in?
Strong team, strong founder, like someone who is very confident in their product, loves it. They need to have passion, they need to really like live and die for it, and really love it so much that they can even think of being not the CEO who runs the company, and give that up for the company to be very big. That's really what excites me as well, because you can have an amazing idea and you can be an amazing scientist, but you might not be the right person to run a company, and it is okay. Like, it's completely fine. There's so many people who would then become chief technology officer and still have a massive share in the company, but I think people really need to lower their ego when they want to make a company very big.
Yeah.
I have seen both. I have seen where people were not able to do that, and I've seen where people were able to do that. And it's putting the idea and the company before your own ego. I think it's very hard for me to assess that, of course, but that's the thing. Important.
I was going to say, do you have an ego scale you score people against?
Yeah, actually, I think it's funny, because when I did the sales training, I had an ego score applied to myself. So I did a test to better understand myself, and I didn't have a big ego, but I had a big enough ego, and I was really shocked, and I was like, okay, that's good to know.
That's fantastic. Oh, thank you very much. Can I pass over to you ladies to manage the rest of the questions?
I was just going to say thank you so much for the talk you just gave, because I've been waiting to hear something so detailed and explain it for ages, because I've got quite good at asking when people say things like, oh, an LP. I'm like, well, what's an LP? You're talking this stuff to me, but I don't know what that means. So I've picked up some bits, but nobody ever sits down and explains it. So I think what you've just done here, I think we should like send it out to everybody, because it was a really good thing. And I think
thank you. And I just want to add to that, if anyone has a very basic question, it's a shame to ask it now, just send me an email. It's totally fine, because I just started in VC a year and a half ago, and I had people who sat down with me and said, an LP is this, and this is this. And if you join like this, and so just,
and then the fact that you have to pitch, you might fall in love with a company, but you've got to pitch it internally to somebody and get them to. So it's not just your decision, is it? So
Yes, exactly. Oh, sorry. Saying we also have a question here from Jessica, and I want to see if we can bring Jessica live.
Hey, Jessica, would be great to see you.
I'm gonna see if I can figure this out. Here we go. Jessica, I think I've just promoted you.
Hi.
Hiya.
Hello.
Can you hear me okay?
Yeah.
Yes, thank you. Thank you for the warning. I'm in Sweden actually at the moment. Yes, thank you for the presentation. That was very helpful. I have two questions. One is related to the timing and when to raise funds as long as possible, and try to avoid raising in early stages and wait for round A. But we have been in touch with a couple of VC investors, and I'm starting to wonder whether there are different timings and the equity stakes. How can that change? So if you have examples of them, for example, when you have a startup that takes VC funds at the early stage, at the seed stage, and then round A and round B, and how the equity stake varies at those stages, and the kind of money that is invested for just general examples would be great. And the second question is about university spinouts. Are they seen in a favorable light by VC investors, and what are the expected percentages accepted by investors when working with universities? Thank you.
Great points. Thank you for your questions. So with regards, I might start with the second one. So generally it's university spin-outs are a great thing, because I was also at the university, and that's where most of the science and ideas are coming from, right? So it's a plus. We like university spin-outs. We like ideas that have been proven and been supported by universities, and we also, of course, look at publications and peer-reviewed journals and all of that. It's great. I mean, there is a problem with when the university still has IP. That's what I mentioned. And when the university takes shares in your company and has too much IP, so it varies from different countries and different universities how much they have and how much they in shares they have as well, if they have invested as well. So it's definitely something that we look at, and I would say so it's not a negative thing. I know some people are trying to found companies outside of the university because of that. It's not necessarily that you need to do that, but it is an issue, right, that we look at. That's what I would say. I don't know really how much equity usually the universities take. I would need to get back to you on that, because we have several companies. Usually when you invest in seed, we want to see that there is at least 30% still with each founder. So but I can't tell you a number for the universities. And the first question, I would say it depends also on how much you can get done with grants and where you are. So as I explained this with the rocket, I would say get as far as you can get without VC and get money, because you give up your equity, but try to get grants and bootstrap. But if that doesn't bring you as fast enough and you need more money to accelerate, then take VC money. And with regards to the rounds, I mean, it's a math equation on how much you raise and how much the company is worth and how many people are still in the company. So that's what you need to consider when you, for example, raise a seed round of 1.5 million. Obviously, the shares are then they will be diluted in later rounds.
Thank you, Diana. That was really helpful. Thank you.
I feel like I just saw someone say they were raising their hand. Did I make that up? Someone just raised their hand? Uh-oh.
I think here is it.
Annalise has got a hand
Yeah,
up.
there we go. Let's see. Annalise, I'm going to.
I think I promoted Annalise.
Oh, there we go. Did we get you off mute? There we go. And then, yeah, and then Maria, I think I saw your hand as well. Put it back up if you still want to ask a question. Okay, Annalise, go for it. Oh, there we go.
Yeah, sorry, I think my video is not working, but yes, very nice to meet you, Diana, and I am Annalise Toulier, co-founder and CSO of New York Therapeutics. My question is very, basic, because actually, I've met a couple of companies in the same case as we are currently. We had a pre-seed fund, we had grants, we are raising a seed fund, and we are at a stage where actually, we are considered by VCs as too early, and we are considered by angel investors as
late.
Not too late, but the seed fund that we need, because we're in a therapeutics environment, we need quite a certain amount. We need 2 million to carry on the development of our product, and for angel investors is a bit too high. So we are a bit in the middle of that, of the two, and between VCs and angels. And actually, we are not the only one company. We've met a few startup companies in the same stage and with the same hurdles. So what kind of advice have you got for us? Is there anything that you think we need to?
Yes, I understand, because I have also company we have invested in, they're hearing the same thing. I know it's also sometimes VCs only invest, especially in therapeutics, when you have preclinical data, or pharma companies only are considering from their pharma investment angle only when you have preclinical data. So it is so one thing I hope I don't need to tell you, which I completely forgot to tell in my pitch, was very important, is that you need to, it's a numbers game, really. You need to write so many, like it's like you can't assume that you speak to 5 and then you have 5 answers, or yes, you need to speak to hundreds. It's like, it's really a numbers game, and it's sometimes it's also not necessarily on that the VC doesn't like you or doesn't believe in you, but what I explained is like the VC life cycle is 10 years. When you are therapeutics and you take 8 years until you potentially get to, I don't know, maybe phase 2 or so, where you could be sold, then when a fund is already in its 8th vintage year, so has already 8 years done, there is no point of them investing, because then the company would not make an exit before the fund ends. And so it's not, I want to say, because a lot of VCs are in that position that they just can't invest because it doesn't make sense. So one thing I would say is you need to talk to loads and loads and loads and loads and loads, and then try to find the right ones that are. So you said you're therapeutic, right?
Yes, yes, we are engineering bacteria to target to remodel tumor microenvironment. So we had a pre-seed fund and and a biomedical catalyst grant. And we had a lot of discussion with VCs. I mean, we've got some VCs very interested by what we are doing, and we've got a few leads. But I feel like, there is a stage where companies are reaching sometimes when we are starting. We are talking about different startups, and different startups at the same stage as us. We're reaching, a bit the wall. And I was wondering whether it is because of us that we are maybe thinking about our business plan, which is not suitable to the market, or is it, where we have to rethink about our business development and the way, we want to put, our products forward, or are we, should we, investigate a bit further the non-dilutive grants and to apply for more grants, and even going abroad, to look at some non-dilutive grants as well, and to get, more. I don't know. I'm just asking what you think about, what when we are reaching this stage, what's the need for startups to fill this gap.
You can also send me your pitch and I have a look, because I don't know really where you are in the development timeline. So I can look at you. I can look at your pitch and give you some thought, because one thing is also that you have to speak. But the question is also, do you get the right feedback from the right VCs? Do they tell you why they don't want to invest? Like, it's very important also. Like, and then you need to filter that, right? Some are honest, some are not honest. But then also, do you have advisors who will tell you, is that the right market? Should you go to another? Maybe you need to speak to some ex-pharma or some advisors in a specific
we had
field.
We've been very fortunate that we got a big pharma who actually put us a letter of support as well, and is willing for the next efficacy studies actually to do a combination study with one of the drugs. So we've got we've got very positive feedback, but at the same time, when we are talking to some of the VCs, I don't say everyone, some of them, as I said, they want to move forward, but it sounds like there is a gap between pre-seed and the seed fund. And I was wondering, because you are part of you're representing VCs, what do you think that startups should do, to make sure that we don't end up in this gap and wasting, not wasting time, but thinking ahead about to do a better way to develop our product to make sure that
Annelies, I would say, because we have another question and I need to go in 2 minutes to pick up my baby, but I would say send me a deck and I try to have a look and see if I know someone as well. I just saw quickly one question. It was said, who does the valuation and perform the associate or principal? How do we see members work together? So the valuation is something that is very often suggested by the company and then discussed and agreed with all the funds who want to invest. So that's where the valuation comes from. But really, a valuation, it's important. It's really what the market wants to pay you, not really how many grants you get or so. So, and then associate or principal. So, but most of the times it's associate is the one who scouts opportunities, who looks at pitch decks in the first place, then discusses and hands it over to more senior people. The more senior over the associate is the principal. Like me, principal is in between associate and partner, and the very top is the partner. And they are the most senior, the most decision maker. The partners are responsible for raising also funds, so to get the money in. And the principals are the ones who are in between. So I scout and I look at a lot of companies and try to understand the market and where we're going. But also starting to, I'm trying to, so the next step for me is to be a partner, right? So then trying to raise funds as well. And also one thing I wanted to say to everybody, it's a very difficult time. Apparently I haven't seen another time. I just started a year ago. so I haven't seen the boom from 2 years ago. But it's like a lot of VCs keep their money for their own portfolio companies. So when you say, Annelies, that people are they're difficult, it's because early stage is very risky. They have already made investments and they're trying to keep their dry powder, how it's called, for their own companies to back them and help them survive this time.
Yes, I've heard that as well. Yes, I agree with you. It's a very difficult time. It sounds like, I mean, it's very difficult for everyone.
But
Thank you.
Thank you so much. And Diana, thank you so much. I mean, I think there's a bunch of other questions. I know I have them, but I know that you also have to run. So thank you for this. It's really, really gratifying to just get the like nuts and bolts, what this is, what we need to be looking at. And I feel like oftentimes that step is skipped. And if you don't have that, there's no, it's very difficult to move forward. So thank you. This has been fabulous.
Yeah.
I think we'll have
Thank
to
you so much.
at some point.
It's so good to see you all. Thank you so much.
Thank you, everybody. Good luck.
Everybody.
Have a great afternoon. Bye-bye.
Bye.